putting yourself or putting your stop loss at a very comfortable position to allow the markets to breathe and allow price to actually play out in your favor, right? The effort you think you need to be putting in, you have to be putting in times 10 more, guys. Welcome back to another YouTube video, FlareFX, where we make trading very simple. Now, as you can see by the title, guys, it's 4 pairs I'm breaking down this week because we did hit 1,000 subscribers. If you haven't subscribed, please make sure to click the subscribe button, turn on the post notification because I post content like this every single week. Now, guys, if you're not registered with the broker that I use, XNAS, guys, the link is in the description, guys. Very good broker. It's the broker I used to trade with the trades that I'll be breaking down, guys. So make sure to check that out. But nonetheless, guys, let's get into the video. All right. So this is gold on the daily time frame, guys. We'll start off with gold and see how this guy's looking. So in and of its own, as you guys can see, this guy's been on an uptrend, guys. As we can see, push all the way to the top. It's a whole lot of bullish momentum. So now I'm trying to find opportunities where we can scale in and enter off of gold, guys, as you can see. So now with this guy, a low has been made and price pushed all the way to the top and took out these highs, guys. And last week we were holding the buys all the way to the top and then price pushed all the way to the downside. Then gold continued to move higher and higher, which is okay, guys. It's good. So we can classify this as somewhat of a break of structure, right? Because we understand that price wants to keep on moving higher and higher, right? But with me, I'm still not satisfied because the high has not been printed really nicely. As we can see, it's just like price just pushed all the way to the top. There's really not as much closure that we would like to see. Like for me, a break of structure would be something relatively similar to this, right? All the way to the top like that, closure above the high, right? But what we can see already is that this guy already is moving higher and higher, so we can assume that he wants to keep on climbing, right? So now this is the range we're playing in. This low over here, bingo bango, and this high over here. There you go. So now this low and this high is the range that we're playing in. This is very important. As soon as you understand market structure, it's highlighting the range, guys. Now, because one thing I used to notice, especially when I started trading, I used to focus on too much price action. What do I mean by this? Is like I'll be too far zoomed out. Like a lot of traders struggle with being too much zoomed in. I was so zoomed out in terms of my analysis where I would clutter myself too much. So when I get the range, I understand what I'm looking at. So from this bottom to top, I understand that this price action over here is what I'm currently looking at, right? So now with gold, I understand it likes to retrace relatively around 50%. So I'll pull out my Fibonacci retracement tool from bottom to top and highlight gold. So already like looking at price action in and of its own, just highlighting it really nicely, making sure that it's perfect, right? So this is the point where I'm interested in buying gold, right? So there is even liquidity resting over here, right? We got some liquidity resting over here. We'll even put a dollar side just to show you guys. So with gold, what I am anticipating and what I am waiting for is that this guy can comfortably come all the way to the downside. This range over here is my point of interest. So this block that we have over here is my point of interest, guys. So we'll come in with our buy limit over here, bingo bango, SL just relatively below the low. Usually I put my stop loss over here, but I'm seeing that there's fair value gaps. So I don't want to put myself in a situation where I'm trying to force a setup, guys. Here's another tip that I'll give you, especially if you're trading like gold. Gold is a pair that likes to wake a lot, especially when it's filling out fair value gaps. So what I try and do is that even though my stop loss needs to be here following my strategy, I do allow some room for breather to allow myself to put myself in a position where trades can go into my favor because I've allowed my stop loss to be big. A lot of you guys suffocate your stop losses. Don't put your stop loss at a place where you know you can be liquidated, where you know you can be waked out, right? And in this instance, we can see we have fair value gaps over here. Even if you go maybe to like the 2-hour time frame, you can see there's still some fair value gaps chilling over here. So you have to make sure that at least you give yourself some room for a breather, right? In case there's some volatility, maybe something happens, Trump announced something, at least you are in a comfortable position and you already determined your risk, guys. Because imagine, and you need to understand, before you open a trade, you're already calculating how much you're gonna risk. Now imagine you're calculating this amount, right? Let's say maybe you risk 1% and then it's relatively based off of this stop loss. Now when you want to adjust your stop loss and you start increasing it, now you're risking more than you actually predetermined in the beginning. You get what I mean? So it's always making sure that putting yourself or putting your stop loss at a very comfortable position to allow the markets to breathe and allow price to actually play out in your favor, right? So for gold, like I said, in this instance, a low has been made, a high has been made, right? this is our point of interest. I am anticipating gold to react relatively off of this spot. We even have liquidity resting over here. Price will come into this zone, respect it, and like I said, allow your stop loss to breathe. Do not put your stop loss over here. Like I said, as much as I would love to put my stop loss over here and make as much money, give it some room to breathe so we can understand that even if there's fundamentals, even if something were to happen where there's so much volatility, at least you're still in the trade and at least you can get your take profit hit, guys. And that's what I do see for gold. So it's still more bullish behavior. I still reckon we're gonna go for 3,000 ounces, guys, but I think it's always a patience game, especially when we're looking at these pairs, guys. But nonetheless, let's move over to the next pair. All right, so this is German 30 on the daily time frame. One thing about German 30, it has been pushing all the way to the top, guys. This is the all-time high. Like, even if you push all the way to the far left, there's really nothing much happening, right? So now, in terms of where I want to execute this guy, already with German 30 on the daily time frame, prices came to the fair value gaps that I've already been looking at, and it wants to fill them out already. Looks like it already has, right? So now, with this guy, it's always the same, guys. We highlight the low and the high, right? We see that this guy's on an uptrend, guys. This is something that's also important. Market structure. This guy is going up and up, right? Because highs and highs are being broken. We also have a break of structure that recently happened over here, right? Bingo bango. We'll classify this as a BOS, right? So now, since we understand we're looking for buyers, one thing I've noticed about indices, they like to retrace relatively along the 73% zone. So what I'm going to try and do is pull out my Fibonacci retracement tool from bottom to top and then switch it over to indice. Right, I'll even come over here so you can see my style, right? You guys can copy this and use it for your own trading, because I know someone's gonna comment and ask what are my settings, right? So those are my settings. This is the low, this is the high. Price has already came to this point, or these fair value gaps over here, and looks like it has already been filling them out, right? I am predicting that German 30 will keep on selling relatively along this zone over here. So this is my point of interest, right? I am looking at buying German 30 over here. So this is going to be my entry, and then my stop loss just below the low. I always say this, and I'm going to repeat it again. You have to allow your stop loss to breathe, especially when you see things like fair value gaps like this, right? As much as it is, I can put my stop loss here following my strategy to the T, but I have to have some sort of discretion, because I can see that there's a fair value gap over here. Who says price won't just come and fill it out? So I'll put my stop loss relatively below the fair value gap. So that's the fair value gap. My stop loss is just relatively below it, just allowing price to breathe. And then this is my POI, guys. And then take profit 1, take profit 2. This is a nice clean 1:4 relatively, guys. You get what I mean? And another thing that I've noticed with a lot of traders, guys, if you understand where the market is going to go, stop stressing yourself going over to the 1 hour time frame, 15-minute time frame to get that sniper entry. You get what I mean? It makes no sense. If you understand where something is going to go, make sure you put yourself in a position where you can buy it. I haven't even went over to the 4 hour time frame. You can imagine. I haven't touched the 4 hour time frame. I've been chilling on the daily, and already we're seeing opportunities like this, right? Relatively 1:4. Now, I want to shift your mindset and understand. Of course, guys, with the 200 Rand account, you won't make as much money as you want to make from this setup, right? But if you invest in prop firm accounts, this is relatively 4%. If you risk 2% per setup, you can pass one trade. You can pass one phase with one setup. That's literally the name of the game. If you understand that once you have the skill, it's just literally putting yourself in positions where you can scale your income and really hinder and punch these pairs, guys. Really make money off of them. So this is what I'm seeing for German 30. It's looking really nice for the upcoming week. Just waiting for this guy to drop into this point relatively over here and start pushing all the way to the top. TP1 and TP2 being hit, and that's what we're looking for, guys. So let's move over to the next pair. All right. So this is NASDAQ on the daily time frame, guys. So with NASDAQ, as we can see, he has been going all the way to the top, but in recent price action, as we can see, this guy has been playing around relatively over here, right? We don't have clear structure. We don't have clear market structure, guys. So what I usually do, as always, is that when I see a consolidation, right, I'll highlight it. So relatively, this is the consolidation. NASDAQ was just playing in and out of the zone, and we broke out, and then we just displaced back into inside, right? So for my breakout and retest traders, most guys got marinated over here, guys. That's what I'm saying. With indices, it's a bit tricky, but only German 30 that I saw that has been moving nice, right? So now I can see that this guy's been consolidating. It's been in a consolidation. Then a high has been broken, and then it displaced back into inside, right? So for me, I'm still bullish, especially on NASDAQ, guys. I'll classify this this is a break of structure. It's on the daily time frame. When you go over to the 4-hour time frame, you see the candles looking really nice, right? So now already in the daily time frame, I'm seeing that this guy wants to keep on moving higher and higher, right? So now if I'm gonna pull out my range, we'll highlight this low and then this high, right? So relatively we're still within this consolidation, guys, so we just have to be patient. I'll remove it. All right, so we have this low over here and this high over here on NASDAQ, right? And when we have a break of structure, this is the fair value gap I thought it was gonna respect, and then it just sunk all the way to the downside. So now since we don't see much on the daily time frame, we go over to the 4-hour time frame and we can see that, okay, cool, NASDAQ has made this low, pushed all the way to the top, made that high, and has sunk all the way to the downside over here, right? So I'm very interested to see how NASDAQ is going to react off of this low over here, right? If NASDAQ is seriously serious about pushing higher and higher and maintaining the bullish momentum, then we are not going to break this low. And even if we do, it's just gonna be probably a wick and then price pushes all the way to the top, right? What do they always say? They say wicks do the damage and then the candles always tell the story. So I'm anticipating that the wick is gonna do a damage, and then the wick is the body is gonna tell us where really where NASDAQ wants to go. But for now, I still have bullish bias, especially on this guy, guys. As NASDAQ has been stubborn, I'm not gonna lie, it has been stubborn, but it's just a situation of understanding and being patient, guys. As soon as he starts getting going and it starts moving a lot, then we can start understanding where it wants to go and execute, guys. Because right now, we'll just be taking trades based off of FOMO, understanding that this guy wants to keep on moving higher and higher. We can't force it, guys. We have to let the setups come to us. You have to let the setup come to us, guys. So just a matter of patience and understanding that this guy has to take its time. You know what I mean? So now we'll go over and break down the next pair. We remember, guys, we have 4 pairs, so it's going to be a jam-packed with value. So let's keep on going. All right, so the last pair is GBPUSD, right? So with this guy, as we can see, let's zoom out a bit, you know, just to see it a bit. I'll even remove this indicator so I can really break down market structure with you guys. So he's been pushing all the way to the top, made that high, sunk all the way to the downside, even breaking this low over here, right? So we've got something like a change of character over here, right? A nice change of character, so we can anticipate that price wants to keep on moving lower, right? This high has been made, this low has been made. We got a break of structure relatively low over here, right? Bingo bango, break of structure. So this high over here, and this low over here are what we're looking at, especially for GBPUSD, right? So now I'll even switch on the indicator again because it just highlights the lows and the highs. You see, this is the thing about market structure, guys. This just helps with understanding where market structure is. I'll switch it on for you guys. It's called swing points and fair value gaps. These are my settings for this guy. It just makes it easier to highlight the lows and the highs, guys, so you understand where you're going in terms of like the charts. You get what I mean? So now we have this high and this low that has been printed relatively over here, right? So now for me, I understand that with indices, they like to retrace 73% of the range, right? So this is the range we have, this high over here and this low over here. Well, we're doing this off of the basis of like what? Of premium and discount, guys. So like I said, the high and the low, we want to know the range. You first identify a market structure, which we already did. We have a change of character, we have a break of structure. This is already telling us this guy wants to keep on moving where? Lower and lower. And I'm identifying these things where, guys? On the daily time frame. This is on the daily, right? Now, since we've identified our range, we can pull out the premium and discount tool. And remember, guys, with premium and discount, if we want a downtrend, we want to sell something when it's at its premium. And if we want an uptrend, we want to buy something when it's at its discount. In this instance, we are on a downtrend, so we want to be selling something when it's at its premium. I'll pull out my Fibonacci retracement tool from bottom to top, right, and identify currencies. This is my currency Fibonacci retracement tool settings, guys, because I know someone will comment and ask, what are my settings? These are my settings. I've got 0.8, 1, 0, and 73 highlighted. That's the only thing I really have, guys. So this is the 73% zone. I understand that most pairs usually retrace relatively along these lines. So we'll come in with our sell limit, boom, relative over here, stop loss all the way to the downside, TP1, TP2 for a nice clean 1:3 risk to reward ratio. We can be targeting the lows and the highs. So remember, guys, the way we trade this thing, right, or the way we understand is that price moves low, it moves high, it moves low, right? We break the low. So we understand this guy's gonna go high, respecting the zone that we're looking at, and come and break this low that we have over here. That's why we have our TP over there, right? Now it makes sense because look at this guy, right? what do we have over here? Even if I can draw it out with this thing, we have a low that has been made over here, a high has been made over here, this low has been broken. Price pushes all the way to the downside, price pushes all the way to the top, it respects this zone, and then this is the low we want to break, right? That's why our take profit is relatively over here, guys. I just gave you the gem, guys. For the guys who are struggling with take profit placements, this is how I do it. You know, target the low based off of like the range, guys. That's why it's important. Number one, identifying market structure. Number two, identifying the range. Number three, identifying whether we're in premium or discount. Number four, implementing the Fibonacci retracement tool. Then we execute based off of that. And the retracement tool is going to tell you what you need to know, guys. It tells you where to execute. It tells you where to take profit, making it easier so you don't have to think as a trader, right? So that's what I do see, especially for GBPUSD, guys. But now we're moving over to psychology now. You know, with psychology, I always wing it, guys. With this week's topic of discussion, let me see what comes into my mind, what I needed to know when I started off trading as a beginner. You know, with psychology, guys, it's always understanding yourself, you know, and it sounds so backwards because with the charts, guys, like me breaking these things down for you on a daily or on a weekly basis for you guys, you need to understand I didn't just wake up and learn this. You know, it takes time. It's a whole lot of years. It's a whole lot of practice. And for me to do it at the back of my head without even understanding, like, it comes to a point where I don't even need to analyze, guys. I can open my MT5 and see whether this is something that I need to sell or buy. You get what I mean? And it gets to a point where you need to understand, like, as much as I can tell you the gems and whatever, you have to put in the work. Number one, you have to be paying it's the 10,000 hours. You know, they say you have to put in the 10,000 hours for you to get to a point of consistency, guys. And that's the same thing, especially with these types of skills. You have to put in the work. Your 10 hours have to be paid, guys. And then the moment you start doing that, guys, like, one thing about trading is that, like, I can give you my strategy, right? You can learn from me. You can understand the way I analyze, right? But as time goes by, you will understand the way you like to trade. You will understand the types of pairs you like to analyze, you know? And I'm only coming here and giving you guys these things because it's pairs that I know and pairs that I've back tested and I'm comfortable with trading, right? For someone, like, support and resistance can work, guys. Support and resistance does work. Your Bogler bands, I've seen people trading Bogler bands, those work. Your moving averages, guys, those work, right? But you have to get to a point where you understand how they move, have your own entry criteria, understand what you're looking for, have your own trading plan. Those are the things that are going to come with time, you know. And what most traders don't understand is that, like, and I think not even, I know most traders understand the whole concept of patience. You know, most of you understand the concept of patience and understand that this is a long-term mindset. I think a lot of us have changed from the gambler's mindset to an investor and long-term mindset, right? But a lot of us don't understand. I don't think, not a lot of traders understand how much effort it actually puts to being consistent. Like, I think people think if I have a trading plan, I follow my trading plan, and no, it's not even, that's just the tip of the iceberg, guys. There's so much more to consistency than you can actually imagine. There's your KPI. KPI are your key performance indicators for people who don't know, right? Your key performance indicators are your win rate, your risk to reward ratio, your pairs, and your trade frequency, right? So now, if you haven't heard those types of things, so I'll even break it down for you guys, right? So your first KPI, which is your win rate. Your win rate is solely dependent on your risk to reward ratio, right? You can have a profitable strategy, right? But you can't force to get 1:5 risk to reward ratios every single time. Like, even if I could take you to the charts, guys, and show you, if I was to go for 1:2s all the time, I'd probably have a higher win rate. You get what I mean? That's your key KPI, guys, your key performance indicator. Your win rate is solely dependent on your risk to reward ratio. Can you see how everything is interlinked? So now your risk to reward ratio is solely independent on your strategy. Do you get what I mean? So those are the things that you need to understand, guys. It takes time, but I think a lot of traders don't understand how much it really takes to reach consistency. It's just not waking up and understanding that, oh yeah, I'm just gonna trade. I've been trading for 3 years, guys. 3 whole years. And you need to understand, imagine this, right? I've been trading for 3 years. I've been on the charts every single day. And I also have clients and paid clients that I mentor every single time. So I'm consistently asked questions. I'm consistently asked different types of questions, especially relating to the Forex markets. And I break down pairs like this on a weekly basis for you guys every single time. So I've been focused on the charts consistently for 3 years, right? And I've only reached consistency relatively around like the end of my second year, relatively moving even to my third year, right? Now, imagine if I've been consistent for that long, right? And then someone only trades once. You come into the charts once every week and then expect to be consistently profitable. Even those guys, and I know some of you guys are part of those people where you trade 3 months and then you take a break. Breaks are needed, guys. Don't get me wrong. A week away from the charts is more than enough, right? Now you get guys, you come trade 3 months and then you take 4 months break and you come back and you expect to get consistency. You can't even be consistent with the habit of showing up, right? Like the first way to get to consistency, it's even in the name, guys, consistency. You have to show up. That's the first thing that is the most hectic. Even if I can put it into gym, they say the hardest way to lift at gym is the door, the gym door, because a lot of people don't even get to gym to open the door. You get what I mean? That's the same thing with the charts. It's the hardest thing to open is your MT5 when you're on a losing streak. Now, I want you to imagine this, right? I want to put you in a scenario and make you understand how difficult it is to reach consistency, right? Because a lot of people don't actually put it out there and explain how much it takes. Imagine this, right? Imagine you started trading, right? First month, you're not making any profits. Second month, you're not making any profits. Third month, you're not making any profits. You're blowing accounts. Forex, the only thing Forex has ever done for you is take money for a year straight. Now, imagine you're at that situation. As a trader, are you going to wake up and come to the chart with the same enthusiasm, with the same passion, with the same desire to actually make money? Most guys don't. That's why it's so hard to be consistently profitable. That's in the name, consistently profitable trader. Those are the guys that consistently show up regardless of whether they're winning or losing. Now, imagine you go through that for 2.5 years. Can you go through that? 2.5 years, guys, of not being consistently profitable, consistently losing money. You ask your parents to give you money, they send you money, you blow at the same time. They send you money again, you blow at the same time. You don't even have a job, you don't even have a salary, you just you know. And in trading, we all know, guys, it takes money to make money. So my word of advice to especially you watching this is like, number one, the amount of effort you think you're putting into trading, you need to go times 10, not even times 2, times 10, because people undermine the fact of how much it actually takes and how much it requires to reach consistency. You know, it takes so much, guys, you know, and it's like understanding that preconceived notion, it's now you locking in. It's February. I always preach this to anybody who's watching this right now. If you feel like quitting Forex right now, tell yourself this is the last year you're going to be taking it seriously, right? Listen, you listening to this right now, yes. Tell yourself this is the last year you're taking Forex seriously, right? Do your best, follow your trading plan, do risk management, deposit amount that you can actually afford losing, right? You have to deposit money in an account where you can trade nicely, you know? So tell yourself, number one, this is my last year taking Forex seriously. So I'm going to make sure I follow my trading plan. I'm as disciplined, I journal, I'm consistently on the charts for this year. Whether I lose, whether I win, but for this year alone, I'll make sure, 2025, I'll make sure I'm on the charts consistently and I try and do my best. If I want to take a break, a week max is enough. You get what I mean? That's what I always preach, guys. And let's see how far you go, you know? And I'm telling you, 90% of you guys watching this video over here, if you take it seriously and you're like, this is the last day, you're going to put in all your effort and you're going to reach a point, even in the year end, you're going to be like, you know what? I've made so much progress. I'm going to actually keep on doing this thing. You know, that's the long-term mindset that you need. That's going to get you from point A to point B. It takes a lot of time. It takes a lot of effort, guys. And the effort you think you need to be putting in, you have to be putting in times 10 more, guys. But from my side, really appreciate you watching till the end, guys. It's a whole lot of psychology. You already know how we like to do these things. Make sure to subscribe, guys. I use XNAS as my preferred broker. It's been making things so much easier, especially for trading gold. So make sure to check the link in the description. Sign up with their best broker, guys. Use it. It's probably the best, especially in South Africa. You know how we have different brokers. I don't want to mention, but Thank you for watching to the end. I will catch you guys next week. I haven't forgotten about the lessons, guys. I will be posting it. I've just been so busy, but I know with the Sunday sessions, you guys enjoy them the most. So I'll catch you guys on the next week. Thank you so much, guys.